Our average customer does 5.6 million of revenue per year with us, and that's grown at a compounded rate of 30%. It's pretty large on average, particularly when compared to other SaaS companies.
So today we're gonna talk about one of my favorite long-term investments, Palantir. I'm gonna break down Palantir's business model for you step by step, so let's kick things off. Okay, to give you some context first, Palantir business model consists of 3 separate phases named Acquire, Expand, and Scale. Long story short, I'm gonna show you how Palantir goes from losing money in Acquire phase to receiving massive revenue with incredible margins in Scale phase, and everything that happens in between, so definitely stick around. But first, welcome to the channel. I'm Investor Who, blah blah blah, I know nobody cares. So enjoy the episode, enjoy your day even more, and don't forget Investor Who.
I got stats. They got opinions, I got facts.
Before we jump into the business model, we first need to understand what is contribution margin, because it plays a huge role in Palantir business model. We believe that the revenue we generate relative to the cost we incur in order to generate such revenue is an important measure of the efficiency of our business. We define contribution margin as revenue less our cost of revenue and sales and marketing expenses, excluding stock-based compensation divided by revenue. At the end of each year, we categorize each customer account into one of 3 phases based on its revenue and contribution margin for that year. Okay, so basically contribution margin tells us whether or not customer accounts are actually profitable. For example, if contribution margin is negative, like in Acquire phase, that means that this particular account is losing money for Palantir. And if contribution margin is positive, for example in Scale phase, that means that this particular account is making money for Palantir. Quite simple. And contribution margin is also used to categorize customers into phases at the end of each year.
We're generating just under 19 million of revenue, but still in the negative contribution margin category. So as we grow these accounts, we'll be looking to move them into the expand and scale phases.
Okay, so as Kevin pointed out, Palantir is actually losing money in Acquire phase, and there are 2 main reasons behind it. First is that a big portion of sales and marketing costs are actually from this phase in order to increase the number of clients, especially on the commercial side of the business, which I actually like, and will explain why later on in the video when we get to Scale phase, and this huge cost will make much more sense. And the second reason got to do with how Palantir actually acquire new clients. In the first phase, we typically acquire new opportunities with minimal risk to our customers through short-term pilot deployments of our software platforms at no or low cost to them. Okay, this is very important, at no or low cost to actual clients. We believe in proving the value of our platforms to our customers. During these short-term pilots, we operate the accounts at a loss. We believe that our investments during this phase will drive future revenue growth. So basically, Palantir is internalizing the cost of installation and giving to customers a free and short-term pilot for their software.
I remember one time with a customer, we had just resolved this huge 70 million row thing down to 6 or 7 million. We pulled up our clients' data and started doing the live interactive demo right in front of their faces. One of our customers was just like, holy shit.
So Palantir is prepared to lose money initially just to show to customers what their software can do for them, because they are sure that once potential customers actually sees the impact of Gotham or Foundry on their business, they will want to have it. And to me, that speaks volumes about how confident Palantir actually is in quality and problem-solving ability of Foundry or Gotham. Because essentially this is what Foundry or Gotham are meant to do. They are meant to solve problems for customers. Okay, and once customers are actually on board and get from acquire to expand phase, then Palantir can start building this sort of snowball effect with revenue, and all that while constantly trying to decrease the costs. Okay, so to recap the acquire phase, its main goals are to get new customers, to prove the software value to them, for free, and to start building revenue so that customers can move to the next phase as soon as possible. To be more precise, customers need to generate at least $100,000 in revenue in order to move from acquire phase to expand phase.
Next is the expand phase, which accounted for about 24% of our revenue in 2019. The objective here is that we should be growing revenue and finding the inflection point to positive contribution margin. These accounts have continued to grow, generating almost the same amount of revenue in 6 months as they did all last year. So strong growth and retention. And we've done this while hitting the inflection point to positive contribution margin, going from negative 43% to positive 35% in 6 months. If this continues on average, it looks like these accounts will advance to the scale phase.
As my amigo Kevin said, the main goal of expand phase is to find the inflection point of positive contribution margin. Or in other words, Palantir is trying to convert a negative contribution margin that customers came with from acquire phase to positive contribution margin, because this is the condition for customers to move to the next and final phase, scale phase. Okay, so how Palantir converts negative contribution margin to positive? The only logical way is to increase the revenue. And one of the things that makes Palantir so special is the correlation between value provided to customers by either Gotham or Foundry and revenue received from those same customers. Basically, the more value that Palantir can provide to customers, the more revenue they can extract from those same customers. In order to optimize the value provided to customers, Palantir first needs to understand main challenges, main problems, main obstacles that Gotham or Foundry are meant to solve. So in a way, you can also say that the main goal of acquire phase is not to grow the revenue, but to find the most optimal way in which Gotham or Foundry can provide value to customers, and revenue growth is only a side effect of this whole process. In 2019, we generated $176 million in revenue from customers in expand phase with a negative contribution margin of 43%. In the next 9 months, ended September 30, 2020, those same customers generated $254 million in revenue with a positive contribution margin of 41%. So from this we can see that the time Palantir needs to convert negative contribution margin to positive contribution margin is between 6 and 9 months. But keep in mind that even though these customers now have positive contribution margin, they can't automatically go to scale phase because, as we said before, Palantir is sorting customer accounts into phases only at the end of each year.
The scale phase is the majority of our revenue, about 76% of our revenue last year, and generating the bulk of the contribution margin. This is where we should be constantly getting better. And you're seeing this from 2019 to today.
So this is where the magic happens. As customer accounts mature, our investment costs relative to the revenue generally decrease, while the value of software provided to our customer increases, often significantly, as usage of the platform increases across the customer's operations. In this third phase, after having installed and configured the software across an entire enterprise, customers become more self-sufficient in their use of our platforms, including developing software and applications that run on top of our platforms while still continuing to benefit from the support of our operations and maintenance services. Okay, so in scale phase, Gotham or Foundry are now fully installed, they're fully operational, customers become more self-sufficient in the usage of platforms, and what this actually does is even further decreases the cost for Palantir. So sales and marketing expenses in this phase are almost negligible. Cost of revenue is also decreasing, and while all that is happening with cost, the revenue itself is growing exponentially. And that's because the value for customers is also growing with time and with amount of data collected. Basically, the more data you give to Gotham or Foundry, the better they become in analyzing this data and giving you solutions to problems. So with time, the value for customers is growing, and so is the revenue that Palantir receives from those same customers. You see now why I think Palantir is a very, very good long-term investing opportunity? So just to illustrate how much costs are decreasing for Palantir in scale phase, if we do simple math from this example, we can see that the costs have fallen by 55% in 9 months. By 55% in 9 months. They were cut in half in less than a year. So if we take a step back and look at what is happening with cost throughout all 3 phases, we can see that first, sales and marketing expenses are almost exclusive to acquire and expand phase. Cost of revenue is cut in half in scale phase, and while all that is happening, the revenue itself is growing exponentially.
So you can see what we're striving for, what is possible with accounts when we leverage the platforms and continue to invest our R&D dollars. Our objective is to make the acquire and expand phases as short as possible so we can grow the scale phase accounts. When we look at this as a whole, all customers should be scale phase over time.
So why I said I like sales and marketing costs? They're fucking huge. I must be high, right? Well, sales and marketing costs are used to increase the number of clients that will eventually end up in scale phase, making massive revenue for Palantir with margins around 70% and more. But keep in mind that Palantir only got 140 or so clients, but the total addressable market is absolutely huge, as they can work in any industry, and besides that they also work in government space that opens a whole new market for them that is normally not available for the vast majority of other companies. So I think that as long as Palantir's got huge sales and marketing costs, there is still a good opportunity to buy in for the long term. I gotta go, but I will leave you with this thought. Imagine in a couple of years, instead of 140 clients, Palantir got 300 clients with majority of them already in scale phase. So what do you think the revenue will look like then? And what do you think the revenue will look like in upcoming years? Enjoy the rest of your day and catch you in the next episode.